Guys. This is a video to help you understand how we took a loss of over $800 in this trade and how and try to avoid it next time. Some of the lessons that was learned in this particular trade and how you can make better choices next time. So the trade actually came to TP1, and after getting to TP1, it reversed and then we got a downward move again back to our TP1 and still moving lower. Right, so it has even taken out equal lows that we got we had here. So this is a boom 500 trade, and it was a sell trade, so we are trading against the spike. So how did I come up with this particular setup? So first of all, we started on the 4-hour time frame, and the 4-hour time frame we had at the time I was looking at this chart, I was not paying attention to anything around here because I saw that this particular order block had a reaction with this candle, this rejection candle here. And when that rejected, another candle started moving low. So when this rejection happened, we got a series of highs being taken out into that. So we had this series of highs being taken out into this area, and then we saw this rejection moving low. All right. So when we got the rejection moving lower, went to the 15-minute time frame to look for a possible entry position to ride down with the downward movement. So when that happened, if you notice, if you look at the chart properly, you will see that there was another sweep of this mini high that formed within this area of interest. And then when that happened, we got a downward movement, a bearish movement with volume, and caused a change in state of delivery, which has caused when the series of candles that took out the high was now broken. So that was now a change in state of delivery. So what then happened was we took our, so let me get this off the chart quickly. So we took our fib, so let me also take away this. So at the time I was looking at this chart, I had not drawn all of this area. So what we had after this change of state of delivery was to take our fib, draw from the high all the way to the low. So what we were actually looking for was to get a retracement into a suitable area, a premium area to sell from. All right. So we usually sell with from our OTE, which is between the 618. So what I was looking for was this retracement into the OTE, which is usually the area where we mostly take our trades from. All right. So this is a very good area where this was potentially sell from. Another thing is there was an inverse fair value gap aligning with the OTE. So we saw that as an area where we could also sell from. So we began to wait for price to return. So when it got into this area, we took our sell. So we took our sell at this region, and then our stop loss just above the high, and then we had a 1:2 risk to reward. And because there were equal lows here, we saw that this equal low potentially gets taken into this fair value gap that is around this area. So this was our trade idea. But eventually when we got to TP1, price actually reversed. And because I was not looking at the chart at the time, price reversed and took us out at this particular area. So a couple of things you would want to learn from this particular trade to help you take better trades next time. So if you go back to the 4-hour time frame, at the time this has hit the stop loss, I began to see a couple of things. Number one is this area that started this sell. We use that as our order block. I usually use that and not the complete bullish candle. Alright, so I usually use the candle that started this bearish movement, which is a huge bearish movement on the 4-hour time frame. And just below it was an inverse fair value gap which was above this area of interest. So this was a likelihood that this area of interest wouldn't hold because of this series of PDRAs. All right. So when this candlestick went ahead of this took out this, it filled this fair value gap and went into the order block and started retracing. All right. So this would have been a more suitable movement to get into this setup rather than the one that we took in the initial place, because when this rejection started happening, what we had here was now um, equal highs. What we had here now were relatively equal highs, and this was a fair value gap. So when this rejection was happening, it would have mean that this was just an inducement for people to start selling, because it now created relatively equal highs, and just above the relatively equal highs, we had this particular fair value gap, and then this other block at the top. So when we'd have dropped at the 15 minute at this time, around this other block that was above, we would have gotten a change in state of delivery at this area. Okay, so a change of state of delivery would happen around this area, and then we would have seen this rejection into this inverse fair value gap that aligned with the change of state of delivery, and then price went lower. So I hope this helps to make you take better trading choices next time. Whenever you see something like this forming, an equal, a relatively equal highs forming close to, especially around your point of interest, right? Above your point of interest or below your point of interest. Also seeing something like a fair value gap and also an order block just above it. Take note that this might be a very good area that liquidity might be resting. So to make better trade next time, it would be good to take advantage of that. You would have not taken any loss on this particular trade if maybe you had break even, or we had break even in this setup. So we wouldn't have taken any loss because it was already on. It's already broken. Would have taken our break even at this point, and this would have just given us a minimal loss or no loss at all, right? After getting to TP1. All right. So I wasn't looking at the chart at the time anyway, so that was why this actually happened. But then again, this will help you make better choices in your next trade. So if this was helpful, do well to subscribe, do well to share it with your friends and your fellow traders. Peace out.